Welcome back to the Market Day Report. I'm Marlon Bowling with you on a Monday as we get things rolling. We're going to take a look at your grain trade, which is off and running now as far as our futures trade goes. And here to help us sort everything out as we start out a new trading week, we go to the phones and we have Dewey Strickler standing by. He is with AgWatch Market Advisors in Franklin, Kentucky. All right, Dewey, let's take a look at the board and see what's going on this morning. Had a weaker trend overnight, and if we pull up the corn market right now, last trades will show we are still a penny and a quarter lower on the March contract. If we go to the May, we're down 1.5 at 373 and a quarter. If we switch to the soybean trade, here we have the March contract down fractionally, down 3/4 at 875 3/4. The May down 1/2 at 876 3/4. So not a lot of direction, but I guess you could say we're maybe drifting lower here as we start out the trading week. The overnight outside market seemed to be kind of all over the place, but mainly a little bit weaker.
Yeah, that's right, Marlon. We just got in the corn a little bit of back and forth action here over the past couple of days here. I mean, if you're looking for, any excitement or thrills in the grains, well, they're probably not the place to be here over the short term. Should pick up a little support in this corn at about 365. I don't see the corn market going much of anywhere here. I think you got a little bit of a gap target when we made a gap at 364 last week. Got a little bit of a gap target up here around 380, and we might be able to squeeze that out.
Used to be the old trader saying was he'd fill a gap in 3 days, 3 weeks, or 3 months. So if they don't do it here in the next day or so, maybe it'll stand for a while.
Yeah, I think it kind of will here. I think this market is really flirting around here with making some multi-month lows here. We put a top back in October of around 410, and I would have liked to have seen the corn market gotten a little bit lower than the 348.5, but at least did take out the previous low of 368 3/4 that was made back in August. So you might say we do have a measurable bottom here in the corn for right now.
Are we seeing a little pressure in the corn today because we have a lower crude oil market, and the heating oil market is lower too this morning, by the way?
I think that's partially it. We did have some short covering in corn by the funds last week. They did have a record short position, but they have taken a little bit off the top of that. Last week was their first week of short covering.
Okay, right now we're showing our viewers at home the heating oil on the February contract is down over 3 cents now. So it continues to add to its weakness as we go through the day. Soybean trade, we'll take a look there right now. The March contract fractionally lower, deferred's just 1 tick higher. On the wheat market, we have had firmness overnight, and March wheat in Chicago still 4 higher at 479.5. Your thoughts there, Dewey?
I think what is supporting the wheat, and that is there's speculation that Russia is going to curb their grain exports here. If they do that, that may swing a little bit of wheat business back to the U.S.
All right, and we'll take a look at Kansas City wheat here. The March is 2 1/4 higher at 473. We have the Minneapolis spring wheat trade on the March, now trading 4 higher at 501. So the wheat markets are off to a good start as far as bullish activity on a Monday morning. And then on the cotton, we were weaker overnight. Right now, we're still that way. We're down 64 cents on the March at 61.81. We're going to pause for a quick break. When we come back, we'll be back in 1 minute with Dewey Strickler talking about livestock right after this. All right, we're back with you. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, and we're going to be taking a look at the livestock trade now with Dewey Strickler. He is with AgWatch Market Advisors in Franklin, Kentucky. He's on the phone right now. Dewey, I'm looking at these cattle and feed numbers that came out from USDA last Friday. And of course, this would have been at 2 p.m. Central Time. That means that would have been after most of the daytime trading had already been accomplished. And I'm looking here, it looks like we have the total on-feed number at 100% in that report. And the trade was looking for 98.8%. Placements at 99% were well above the average trade guess of 94.9. And then you had marketings at 101%. They were actually under the average trade guess by about a full percentage point. So on the surface, you would think that would be a bearish tone, but we had a higher cash cattle trade when we wrapped things up last week. How'd that happen?
Well, I'll tell you what, you got packers that need cattle. They're going to come out and they're going to buy them, to fulfill the near-term needs here. My look on the cattle on feed is that, yeah, it is a little bit of a disappointing report, but when you look out into the spring, we're going to be looking here at tightening supplies going into the spring. So, I mean, if you want to try to find a little bit of kernel of hope, there is one out there. It shows we should be tighter as we get a little bit further along in 2016.
Is this would this have possibly been one of those reverse spins on the old axiom where you sell the rumor and buy the fact?
It may be. We'll probably know here in about 10 minutes when the cattle trade begins to open here.
So we'll be watching closely for that. Now, we did have a strong trade on Friday in the live cattle and the feeder cattle market ahead of that report. Were you surprised that we had that much volatility in advance of that report? Because it did that for like 2 days.
No, not really. I mean, we had 2 days of decent gains there, but I mean, if you look at your chart on February cattle, we did close off of the highs there, so I think we'll probably see maybe a little bit of a backfilling here today.
Now, if we look at the cold storage report numbers that came out from USDA, the total red meat supplies in the nation's freezers were 1% lower than what they were in November, but they were still up 12% if you compare it to the numbers a year ago. And in the frozen beef, it was 1% higher than November, but up 16% from a year ago. I guess that wasn't totally unexpected, though.
No, I don't think so. I think that's just really a reflection of our economy. When you look at the pork stocks, too, they're up about 8% above a year ago as well.
Okay, now another factor here to be weighing in on the futures is the cutout values that we saw from USDA last Friday. If we can pull up the beef cutout values, the last update we had choice cuts down 284 at 224.83. Selects were down 240 on Friday, and that put the average value at 220.68. And here again, that was in the face of what eventually ended up to be a higher cash cattle trade. That was a bit of a surprise. So we have to factor that in as well on the open today. The feedlot sales were 133 to 135. I do want to take a peek at where we finished up in the lean hog trade on Friday. We were a little bit weaker across the board, but not by very much. The last trades that we had on February were around 63.15, April around 69.12. The cash hogs were firmer, though, Friday, Dewey.
Yeah, that's correct. We just had a little bit of one-day pullback. I would say that the hogs will probably take their cue from the cattle here today. I wouldn't be surprised if we don't see the hogs try to work up maybe a couple of more bucks here, get up to about 65 basis of Feb, and then I think we're going to start to look at the pork complex begin to fizzle. Yeah, the uptrend is still intact in that lean hog chart. I was looking this morning, and it's actually right at the upper end of that uptrending channel. So, Dewey, I appreciate you helping us sort it all out. And again, we'll be opening up the livestock trade in the next few minutes here. So by the time we have our next marketing update, we'll have the live quotes for you. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Always good to visit with Dewey, get his insights on the markets. And Casey, so far, kind of steady as she goes. We'll wait and see how the cattle want to perform here in about 10 minutes.
All right, we'll keep an eye on it. Thanks so much, Marlon.